Welcome back to yet another session of Tax Mantra on denial of depreciation on goodwill, beginning of a new saga. In part 1 of Tax Mantra, we had discussed and deliberated on meaning of the term goodwill and the issues as to whether other business and commercial rights would continue to be entitled to depreciation even post amendments brought in by Finance Act 2021, and how values can be attributed to such components out of the compendium's whole. Having understood that goodwill is different from other business and commercial rights, and there is a possibility of splitting up the same post amendment in order to avoid tax leakage, the next issue which I would like Mr. Neeraj Jain to answer for us is, what could be the stand of revenue with respect to the claims made by the business houses in the years preceding the previous year, 2021?
Thank you, Punita. The legislature has specifically made this amendment effective from previous year or financial year 2021, which is relevant to assessment year 21-22. It is a substantive amendment which is concerned with the determination of tax liability of the taxpayer. This amendment, being a substantive amendment, in our opinion, should not disturb the claim made by the taxpayer until the financial year 2019-20, or rather amendment in fact legitimizes the past claim of depreciation on goodwill till the financial year 19-20. In our opinion, or in our view, being a substantive amendment, it would not be possible for the revenue to deny the taxpayer's claim of benefit of depreciation on goodwill in the past year prior to assessment year 21-22 by virtue of this amendment. Benches of the tribunal, in fact, relying upon this proposition, has been in fact allowing depreciation on goodwill in claimed by the taxpayer in earlier years.
Amendment disregarding goodwill as part of intangible assets will adversely impact the buyers who shell out a substantial consideration, much more than the value of tangible assets for acquisition of businesses. I would like to ask Mr. Rohit Jain, so what should be the proper course for the acquirers going forward? Whether the acquirers can going forward continue to attribute the residual consideration to various bundle of business and commercial rights, except for goodwill, of course, while recording such restructuring and strategic acquisition in the books of accounts?
As we discussed in the part 1 of our tax mantra, we said that there are in fact various intangibles which are given in section 32(1)(2), and the depreciation which has been denied by the virtue of this amendment is only on goodwill. So goodwill is not the end of everything. What we have to recognize and what we have to identify when you acquire a business is what are the intangibles which I acquired, which became part of the goodwill. In fact, going forward, the documentation will play a very big role in order to identify the intangible assets, maybe to specify consideration against various intangibles, allocation of that consideration for the purpose of accounting, for the purpose of claiming the depreciation thereon. I think valuation will become, so therefore robust. There should be robust documentation which should be at place, of course under the guidance of some professional, as well as the allocation should be in some scientific or a reasonable manner, and you would be required to justify the allocation of the consideration or the cost which you may have paid for acquiring the business, and part of which is identified and recognized or identified to a particular intangible asset. But of course, if any part of the consideration based on some scientific or a reasonable determination is attributable to other than specific intangible assets, which are the categories specified in 32(1)(2), probably that may not be eligible for goodwill. So therefore, the short point is allocation under proper legal advice and robust documentation is, I think, is going to be the mantra in future if someone wants to really claim depreciation in accordance with law.
As Mr. Rohit Jain pointed out, that the business houses should ensure that the purchase price allocation report should be drawn out in a scientific and robust manner by the experts while allocating the values into qualifying intangibles other than goodwill. Mr. Vora, I would like you to answer it for us, whether the revenue can question such detailed allocation by asserting that these are nothing but actually a part of goodwill.
2 points that come out from the question that you have raised. One, conceptually, whether these different intangibles that are acquired as part of the business are no different than goodwill. I think that's the first question. And I would tend to take the view that these are all separate species of intangibles which are recorded under the head intangibles in terms of section 32(1)(2). They have different characteristics. For instance, if you look at trademarks, copyrights, they are all intellectual property which is capable of being registered. You have licenses, which is another species that is not equivalent to trademark. It is also at the same time not equivalent to goodwill. So the courts have made this distinction between these various intangible assets on the one hand and goodwill on the other, and there have been settled precedents. For instance, the Karnataka High Court, the Delhi High Court said that you cannot equate trademark with goodwill. And if you look at section 55, where it talks of the cost of acquisition, it separates at different points of time. Goodwill, probably the amendment came in 1988 to deem nil cost of acquisition. Trademarks came much subsequently. So for these different kind of self-generated intangible assets, the amendments made from time to time in section 55(2) also is a pointer to the fact that these are separate, distinct and different assets. They cannot together be regarded as goodwill. So that's the first proposition. The second, about your question on whether it will be possible to allocate the price paid over the different components. Now, while the amount that is paid, the purchase consideration is known. Now, this will be a tug of war between the revenue and the taxpayer to say that how to attribute and allocate this consideration. The revenue would try to allocate it towards non-depreciable assets. For instance, they would say the major upside is on account of land. They would also want to put some to building. Now, clearly the answer would be to have, as Rohit said, a robust documentation to list out the intangibles that are acquired as part of the business. B, to support it with a reasonable and scientific valuation, which allocates the purchase price over the different assets that are acquired and the intangibles that are acquired as part of the business. Notwithstanding that, the revenue is entitled to question, and they have, from practical experience, I can point out, they have questioned in the past the breakdown of the price over the different intangibles that are acquired, invoking explanation 3 to section 43(1), that the value placed on a particular asset has been done in order to claim higher depreciation. So this will, I think, trigger another round of litigation. A, whether on the intangibles acquired you are entitled to depreciation, whether they should be treated as akin to goodwill, and B, if yes, what should be the value that should be placed on these intangibles. So I think that will start another spate of litigation, and probably this does not seem to be ending at the moment. I think it'll be a matter of time before again this controversy is put to rest. I think another incidental question that will arise is that if you have acquired the business in the past and you have described it as goodwill in your accounts and in the tax return while making the claim of depreciation, can you step back and now say that this consideration paid needs to be allocated over the assets that were acquired, which are not only goodwill but various other intangible assets? Now, that kind of retrospective allocation of the purchase consideration, whether the revenue would permit, would be a challenge in itself. But going forward, at least for the years that are open, the suggestion would be that the taxpayer should now allocate the purchase price over the various intangible assets that are acquired at the commencement itself, rather than waiting for a subsequent time to revise that allocation, and which would again start a fresh round of litigation with the revenue. Thank you.
I would like to thank Mr. Ajay Vora, Senior Advocate, Mr. Rohit Jain, Partner Vaish Associates, and Mr. Neeraj Jain, Partner Vaish Associates, for giving such valuable insight on this contemporary issue of allowability of depreciation on goodwill. But this is not the end. Stay tuned for our upcoming sessions on other interesting topics. Till then, keep watching our videos and stay safe. Thank you.